Hey guys, hope you're doing well. Let's do my trade review for today. It is Wednesday, April 1st, right? Yes. And we had a few trades today on the SPY. And I was kind of fusing my two trading strategies together in a way. We'll go over that real quick here. So I wasn't filling any orders in the early hour of trading, in the first hour of trading, just because I didn't see anything I actually liked. So if you look at SPY on the hourly chart, we're in an hourly downtrend. And that's something notable. That yesterday we actually confirmed an hourly downtrend with a lower high and a lower low, and then we gapped down significantly today, and now we're still weak. We rallied first thing, came up here, and then we lost the trend, and now the bears took control again. So guys, there's opportunity in both directions. That's why it's important when you're trading to not go in with any kind of directional bias. You need to see what the price action is telling you, see what these institutions are doing before you put on a trade, and then they run you over like a train, okay? I have a hair in my mouth, hold on. Anyhow, so I found the morning session was lacking a bit of clarity, and there was a couple orders I put in because there were some moments where I was convinced that we were setting a higher low, and there were some moments where it was looking like we were coming up here and topping up. But as you can see, we topped out, and then anybody who tried to short here just kind of got squeezed out slowly until we finally got to a point where there was just an imbalance. There was no buyers willing to come in here, and that happens to be the high of pre-market on the SPY, which is around 251-ish. So that's this level where we kind of topped out at, but obviously in hindsight, it looks like this. And we know that when you see a market doing this, the most likely scenario is for it to continue. Now, the reason why I was able to trade against the trend here and be somewhat comfortable is because I was paying attention to other market signals here that were signaling some red flags for this SPY uptrend at this point. So definitely keeping an eye on the financial sector and the Qs, because now we're breaking the low of the day on the tech sector and they're leading the way here. So there was some signals if you're watching the big tech sector names. If you're looking at Microsoft, Amazon, Facebook, these names were giving some signals about the direction of the market here. So very important to keep an eye on that to gauge the direction of the SPY. All right, guys, so let's get right into the trades here. I'll show you all my executions. I'll bring up the window here for you, and then I'll minimize it. And yeah, so first trade of the day here was at 11:03 where I got filled on this call spread here, 254 to 257 bear call spread. So I sold the 254 call and I bought the 257 call. All right, and you can see that right there, the commissions paid and everything, about 64 cents a contract. Anyhow, so I entered that position while the market was generally going up, and I entered on a limit order, and I collected $48 for that spread right there, okay? Now, I only entered one, which is normally about half the size of my normal position, because I was leaving room in the trade in case I needed to scalp around it or hedge against it or stuff like that, okay? Because I know that this trade on its own has an edge in the market, because since it expires today and the SPY is moving like that, all we need is a bear break and that thing is gonna go to zero practically. And obviously now in hindsight, I'm out of the trade, but I could have held on with a break-even stop and it would have probably expired worthless. But at the same time, I'm looking at profit in my face and I want to go outside and take a jog, so I'm not in the mood to stay in trades. Okay, so I put on that trade, 11:03 I got filled. So let's see, 11 o'clock was just about here. So SPY hadn't exactly topped out yet. It was just around here. SPY was kind of breaking above 250.50, 11:03. So I got filled here, and then we actually broke to a higher high. So obviously leaving room in the trade. So I wasn't expecting to be right and stop out as soon as it breaks the high, because I know that the market, when it's approaching a level, a key area of resistance, it most likely is going to break up above it a few times, kind of chop around. So I'm curious to see what the price action is going to do, which is why with these kind of credit spread trades, I will allow a wider stop. So again, there's a larger margin for error with this type of trade, okay? And again, I'll stress leaving room in the trade in case you need to scalp around it or get out, okay? Very important here. All right, guys, after that, I entered some puts, and now this is where I was scalping around the position. So I was trading the 230 puts on the SPY here, and I got filled the first contract at 11:20. You can see that right there. So these were scalps. I got in at 11:20, got out at 11:28. Got in again at 11:39 for the second leg down, and then I got out 3 minutes later for some nice profits. So let's take a look at those ones real quick here. And we're going to look at the 5-minute time frame and the 2-minute time frame. So let's look at this drop right here. You can see after we broke to that high, it immediately got some bears coming in here. The bears kind of tried to take control, and I was watching these 5-minute bars forming on the financial sector and the Qs, and you can see we broke to a higher high into a bear inside bar and then into a bullish reversal candlestick, and that was a setup for a bull trap right there, where you see this kind of candlestick and it's giving hope to the bulls that we might in fact push higher and try to get to 252. But there was just not enough strength up there, and the bears were just able to take control. And the sellers took control and started to grab some of this liquidity in the market in this general area, okay? Some dumb longs that might have entered. 1120, I was in the put right here. So I got filled before the drop. So in hindsight, my entry looks actually flawless. I got filled 1120 and then the market dropped. So nice fill on those puts right there. And obviously with that put, with that scalp, definitely I would have had a stop right above the high of the day at that point, okay? So I got out at 1128 when SPY was around VWAP right there, yeah. So you can see it on the 5-minute chart. It was right around 2. So that was my target from up here to there. That was my target for my scalp. And I was comfortable holding my short calls at that point, obviously, because once we see a bear break of that size, it's showing that the bears are potentially taking control, and we can look for the most likely scenario does in fact become that we come up and form a lower high and chop around, or a second leg down. And we ended up getting a second leg down at that point, and I took advantage of that second leg down too with the same puts. So I got back in at 1139. My fill was $62 a contract, so 1139 would have been right here on this bear break. So you can see here we came up for a weak lower high, came up to the moving average, and at this point I was looking at the SPY, but really the signal came from looking at the tech sector names. You had to be looking at Microsoft at this point, because Microsoft was breaking to a lower low aggressively and SPY was not yet, so there was a bit of an arbitrage there. So I took advantage of that and I filled those 230 puts again, that time more aggressively with an adaptive market order. I didn't limit into that trade, I got in with a market order and I filled at $62, and then I instantly tried to sell one on a limit at the ask at 68 as it was dropping, okay? Because when I'm in that kind of trade, and at this point it's momentum to the downside, so I'm ready to protect the trade. You know, I'm not going to be messing around letting it go back to my break even and potentially going red on that trade. I'm not going to allow that to happen, obviously. Going down, covered the first one at 68, covered the next one at 71 at 1142. So that was right here. You can see that we came down for a second leg down, and then we chopped around pretty aggressively, and then the bears are able to take control for the rest of the day. Just to clarify, I got rid of the last put scalp at 42 right here. So after we saw the move on the first inside bar, okay, I was covering that position. It was a scalp anyways. And then I covered the rest of my short call position at 1150, which would have been on this inside bar right here, on the second inside bar. So you can see first leg down, second leg down, attempt for a third leg down right away, but it failed. So at that point I was covering my spread, and I just wanted to take the profit and get out, you know. But obviously I could have held on with a break-even stop. In hindsight, that always makes sense because the bears were able to take control and push this down. The tech sector is seeing some considerable weakness. Anyways, guys, so I'll take the money and run for today. So that's just an example of how I can fuse the two ideas together, which is basically selling or collecting credit from the market, but also being able to scalp around the position in the case of an emergency, or in the case of you need to hedge, or potentially just want to capture a different move, right? So that's why I think it's important to leave space in your trades, keep your risk managed on your entries, but also leave room in your trades to potentially scalp around it. And yeah. So that's going to be it for today's video, guys. If you learned something from this video, please give it a thumbs up. I wish you a great day. Take care.